And head over to Robert Talevski, Activam MD. Robert, we've been talking about the momentum, particularly in US equity markets since Trump was re-elected. Is the Trump trade factored in now, or what do we see in the months leading up to the inauguration?
Yeah, I think, Juliet, the valuations are starting to become more of a talking point, particularly their elevation. Aussie equities are sitting at sort of 18 times forward PE, above the 14.7 average. US markets are just under 25 times forward PE 1 year, well above the 5 and 10 year averages. So I guess, valuations are sitting above what I would call a psychological cushion. Their elevation supported by this anticipation of US rate cuts and further, tax cuts in the US and further interest rate cuts here in Australia and in the US. We're starting to see some of that anticipation dwindle a little bit. Potentially 2 more rate cuts in the US and 1 to 2 in Australia, maybe by mid next year. So, we may not see some of that rotation into the more riskier asset classes like your small caps and emerging. However, look, fundamentals seem pretty solid. PPIs and CPIs are looking, reasonable. Solid earnings expectations. We should get something around that 5% earnings year on year for Q3. Nvidia is going to be an interesting one this week, and how the earnings go. We expect to see some reasonably solid earnings, and that should sort of put markets on solid footing for the next couple of months. The consumer, very important, seems to be resilient. Consumer confidence has shot up a little bit since the US election and Trump's win. US retail sales we see coming in at sort of year on year 5%, underscoring that resilience as well. But the potential for tariffs may pose some questions on confidence. Higher end consumers probably won't be affected so much. They're still enjoying this sort of, wealth effect from new highs in equity markets globally. Even the old, 70-30 balance fund here in Australia has sort of achieved well into the double digits in the last 12 months. Activam's balance funds returned 20% over the last year for its investors as well. It's the lower end that's probably where the key here is, and something to watch out for. Already struggling, it's fair to say, and so we'll wait and see what happens there, given obviously the potential for further tariffs and so on.
Yeah.
Markets probably, sorry, you go.
Well, no, I just wanted to pick up on a couple of those points there, Robert. And Nomura is one of the first to come through saying that they see the end of the Fed's easing cycle now in December, potentially, as we await these tariffs that are going to potentially be inflationary for the global economic outlook. You say consumers still remain resilient. Does that change if we do see the end of the cutting cycle and perhaps the RBA here doesn't join at all?
Yeah, obviously there's some other factors. Rates are one factor. One of the most important factors in the last couple of years has been, unemployment. And that's really sort of kept everything together, and the low unemployment levels as well. And I know obviously we're seeing some signs of that slowing, but we're still seeing some, very, very low compared to historical levels of unemployment. And as long as we see that, we think that should still, obviously support consumers going forward and equity markets as well.
So where do you look for value there? We have been talking to so many people saying small caps is where it's at. I mean, that's what everyone said this time last year, and they weren't correct. So what is your view, Robert?
Yeah, look, I think late last year I was probably been one of them that's been talking up small caps. I think that, look, they seem pretty attractive on a valuation basis, obviously relative to large caps, higher earnings potential and expectations, particularly in the US. But at the same time, obviously, we've seen a bit of a delay. We haven't seen that sort of, cyclical kind of rotation, if you like, yet. Pretty interesting last week. We saw small caps have one of their best weeks in a number of years. It was up about 6%. So maybe that's an indication that, small caps are starting to sort of hit their stride. At the same time, mid caps is something that we're looking at very closely as well. Not as cyclically driven as the small caps, but also relative to large caps, offering a slightly better valuation and earnings potential as well.
And Robert, when we look at the local market, which hit a record yesterday before easing from that, what do we see in the last couple of months of the year? Everyone's starting to talk about Santa Claus being around the corner.
Yeah, I mean, traditionally here in Australia, we have a pretty quiet period of what happens in the equity markets, particularly around December. I guess if you look historical, that's sort of what's happened. So we probably might get a bit of a sort of a quiet period over December. But again, I think this anticipation of rate cuts early next year, I know it just keeps getting pushed out further and further. But again, that should hopefully give investors enough kind of confidence, I guess, into sort of the new year. But it really will be interesting to see what happens into the new year, both here domestically in Australia. Earnings haven't been that great. They've been flat to negative. And that's something we're sort of looking at for financial year. And obviously China as well, given the issues around demand and obviously for commodities, that we're sort of looking out for as well, and what the impact of that will be on Aussie equity miners.
All right, Robert, thank you. As always, Robert Talevski there from Activam Group.